Alright, hello everyone, and welcome back to Daily Update, my 1000 Days Challenge. This is day 729, so let's get things started. Alright, so first and foremost, in terms of weekly market structure update itself, we're looking at S&P 500 Nasdaq. We definitely did form a very nice green bullish candlestick on the weekly chart itself, and also on the 4-hourly chart, you can see the retest over there. But yeah, I'm not day trading on that, so I'm just looking at the daily time frame above. So the key thing that I want to see is actually some consolidation over here to potentially form somewhat like a base similar to here in the next coming 1 week. If we do form something like that, this will give a very much more strongly likelihood in addition to the 200 exponential moving average on the daily chart to go slightly lower over the next 1 week itself. In addition to that, once we do consolidate over it, we can have a very strong base to push up from because we have a much larger base itself. If we immediately try to retest it over here, then the chances of us getting a rejection will be much more likely higher in that sense. Alright, if you look in terms of Nasdaq wise, why I do see something similar itself, we do want it to actually consolidate right below over here to form somewhat like a strong enough base. Basically, like a pyramid structure, you want a larger base itself to be formed. Only then when it does push towards the upside, it will be much more stronger push in that sense. It's basically you want to form the foundation level itself. All right, and over if you look in terms for ASHR itself, what we do see is the set that we actually did break towards the downside. We did form a green candlestick itself, but in the grand scale of things, I still do lean towards further bearish momentum itself, simply because of the fact that we did consolidate over here, forming what I call a base structure over here, and then once we break over that. Of course, we could have a weak retest over here again, but I still do lean that we'll be much more likely to retest this $30 range than to actually break up right above that. Unless, of course, we were to immediately break up right above the following week and the following day ahead, then yes, this could be a false breakout. But otherwise, then that's what I'm leaning towards further bearish momentum for ASHR and also potentially for KWEB as well, as we also did break over within this range itself, but we did see over here as a false breakout, immediately we went back right into it. So this can only be considered a false breakout if we actually break right back into it the following day itself. If it fails to do that on the second day, then even on the third day is much more unlikely to actually break back into the structure itself. All right, and then finally for Bitcoin itself, so it's very interesting to see. We definitely did form a red bearish candlestick, inverted hammer kind of candlestick, unlike what you see over in S&P 500 and Nasdaq. But that could be said that we could be seeing some sort of pressure and momentum over this weekend itself, even though volume is likely to be much lower. I'll be very cautiously bullish and at the same time a little bit bearish in the sense that we could see some light pullbacks ahead. But if we were to break this high, which is currently at 24.45K itself, which means we will break the 24.5K region itself, I do see a very strong push, especially towards this 27 to 28K region itself, because in between this, we actually do not see much of a volume potential in that sense. You can also add in terms of the VPVR to actually see that if you do want to see it. That is, yeah, that's all. But anyway, yeah, volume profile. So if you do that over here, you see very clearly that right now we are, of course, consolidating over here itself. You can see that there's very light volume right above this point itself. So a breakout in that direction itself would likely lead towards a strong push towards the upside over here itself. But bear in mind that what you see over here is actually just a visible range itself. So it's actually not a fair comparison to say how long far back into the future itself, just what you see over here in terms of the chart wise. So you can see over here that there's only volume over here, volume over these two candlesticks. So definitely there's a lot less volume over here. So definitely you do want it to break over there, and with conviction itself, we could see a very much strong push towards the upside. So that is what I'm leaning towards to, which is why I'm still staying in terms of my 4-hourly chart. That there is a potential for that, and I'm using a 50% risk to reward, 50% position sizing remaining in that sense. However, if we do break below this 20 exponential moving average and closes below it, I will close my remainder 50% of my position itself. So that's something to bear in mind. You can also see a decrease in terms of volume as we do pick up in price, which is definitely not a good sign. So I do think a potential pullback over the weekend is definitely possible. The question is how far will we pull back if we do pull back? And if we do see strong support to 20 exponential moving average, then that will be a very good sign that we could be consolidating right above it before we push to much higher high. Yep. Otherwise, that's more or less about it. So if we do consolidate over here, likely it will still take another 1 to 2 days, which means over the weekend itself, then for the 20 exponential moving average to catch up, in which case I'll be looking to at a very strong long position setup with a stop loss right below it based on price action wise. Otherwise, that's more or less about it. If you guys have any questions, feel free to provide your comments below, and I'll see you guys tomorrow. Take care. Bye bye.